Hi everyone, welcome along to our Market Watch video for the month of March. Lots to get through as always, so let's get stuck straight into what we should be looking out for the coming weeks. Those of you who have already got a copy of our 2018 market forecast will be aware of our bearishness in the metal sector. Gold, silver, platinum tend to be quite bearish through the month of March. You'll see here the report we actually give a date, sell date around this 27th of February for gold, and actually topped just a couple of days before, but there was definitely nice entries in there for the short, and we're looking for continuation of that down through March and looking for lows towards the end. Same with silver. There was a sell date just a little bit before gold. We're still looking for that bearishness, and we're still looking for that continuation before looking for a low, ideally somewhere towards the middle to end part of March. On our currencies, quite a similar picture. We've seen the dollar index being a little bit stronger in recent weeks, but we should be looking for a little bit of a high fairly soon in the dollar index, looking for a bit of weakness in the dollar to start moving lower again. Things like the Australian dollar sitting nicely. We could find a low towards the middle of the month. Same with the British pound, set nicely. April is the strongest month of the year for the British pound, but it tends to make a low in March. So if we can try and find an early entry into that, we could be in a really nice position for trying to catch that momentum higher. Canadian dollar tends to not come towards it later in the month, so I'd definitely be favouring things like pound and Aussie. The euro as well, likewise, obviously opposite to the dollar index, and the Kiwi also a nice one running through for the March. So that's the theme really in the seasonal side of things to look for. So a few lows and basically dollar weakness towards the end of the month, but there's something a little bit more detailed I want to show, something a bit different than what I would typically go into in these videos. That's because I see something very interesting happening in the bond market. The bond market, the US Treasuries, is not something you hear talked about much in the retail sector. Not many retail traders tend to look at those. They tend to focus on the major currencies instead, but it is a very, very important market. A lot of big money looking in here, and it actually has a big impact to where our currencies go, which I'll show you in a second. But the reason why it's of interest to me, just come into the COT data, and I'm going to bring up the US 10-year here. You see at the top, US 10-year. We're getting into the areas here we've seen before, back up towards the commercial index, getting up towards 100%, and that's because of the buying. We've seen heavy buying coming in here on the US 10-year, and you see in the past we've had this rally again coming back up through here, and then at zero we see the decline, zero see the decline, and then back up 100 you see the rallies we typically get from this. Same with the treasury bonds market. We've seen a lot of buying coming in here as well, not quite as strong yet, so we need possibly might see a little bit more over the coming weeks. But why am I talking about treasury bonds? And the reason why I'm talking about treasury bonds actually is because of the correlation between treasury bonds and a lot of our currencies, and particularly the US dollar. Here's the correlations table. You'll see here across the top there's the 10-year and the 30-year charts we just looked at on the COT data. Here's the 10-year in particular, and you can see here it's obviously euro dollar, but there's this Swiss franc negative correlation, a negative correlation between the 10-year and the Swiss franc, the euro. You've got the Japanese yen as well, British pounds, very, very strong negative correlations, and of course in the 91% here is with the dollar. It's a very strong positive correlation. And I actually just want to show you a chart as well of the correlation between the dollar index and the treasury bonds. Let me just turn off the dollar index a second, just so you can see the treasury bond chart. There's the treasury bonds, and we're coming up to a really, really nice area of support, long-term trend up through here. Obviously they've been under pressure, both bonds and the dollar index. We know that all through last year we've seen a lot of markets perform very, very well against the dollar, and we've seen the bond market actually come under pressure, but we're coming into a really nice area here, this really nice trend line we're coming up against. And seasonally towards the end of March we typically see the bonds actually perform really well, especially in through the summer months. So we're in a real nice area here that we're coming to, definitely a really nice level of support, and this kind of area we could see a low from this. And why would this be important as a currency trader? if we do see a low here in the bond market. If I just bring up the dollar index, it will be quite clear to see the bond market typically leads the dollar. And you'll see previously when we get lows coming off through here a few weeks later, actually even a couple of months later, the dollar tends to make a low and tends to follow up with it. Again, we make a high here in the bond market, and the decline, and a few weeks later the dollar starts to decline as well. So there's a leading market for the dollar index. And if the bonds do hold here and we start to move higher, as I say, they're not seasonal, not seasonally bullish just yet towards the end of March. But if we can hold here and actually perform and outperform the seasonal period, and we start to actually push higher, I would expect to see the dollar index in a few weeks. Usually I say a few weeks of a lag. Typically whenever we see the bond market rally, the dollar follows a few weeks later. And if that was the case, that would be quite negative for things like our euro or pound or yen. It's definitely a very strong correlation with the Japanese yen, so we'd likely see weakness in those. So really, really interesting developments in there in a market that probably most of you wouldn't be aware of. And it's one of the main reasons why I like looking at COT data. It allows us to look at a market holistically and actually see what's going on beneath the surface where we wouldn't ordinarily be able to do so. Really, really interesting positions coming into the bond market, and I think we're going to see a lot of this filtered through into our currencies over the coming weeks and months. But stay with the seasonal moves that we're expecting at the moment. Look for the lows and things like our euro or Kiwi, Aussie and our pound over the next week or two, and let's see if we can get a nice rally on that. Also following the last months, we talked about the indices. Here's the S&P. We got the low in early February, and we should see a continuation of that through to the end of the March. So I want to stay with the equities as well through to the end of the month, and then look to either take some profit as we slightly see some weakness. So that's the plan over the coming weeks. Lots going on, lots to aim for, guys. So, but by all means, take a look at the data for yourself. Come in, check out the COT data, check out the correlations as well. I always recommend this table. You'll get to see the link at the top through there. Check out the correlations. Very, very powerful to know which markets are leading what, and definitely the evidence is there over the years that the US bond market leads the dollar, which in turn obviously will have a major impact on the rest of the currencies we are trading. Okay guys, that's it for March. Safe trading as always, and I will talk to you again at the beginning of April.